bos kami dah beli. Dia tak kasih buat aktiviti kat sini tau.
Apa-apa pun tak nak.
Cik!
Cik, Pai! Sekarang ni tempat bisnes aku. Bukan tempat untuk kamu semua main-main. Faham? Aku dengar nama orang tak letak firma yang lengkap. Tak tahu tak dari mana. Kalau mau belajar, kamu pergi cari tempat lain. Diamlah. Jangan buat bising. Customer aku sudah komplain.
Saya faham Cikgu Siti. Tapi budak ni tak ada sijil lahir, tak ada dokumen.
Tak bagi budak-budak ni pergi sekolah kan? Tak apa. Biar aku je yang dekatkan sekolah dengan diorang.
Boleh tak saya tukar apple ni dengan buku tu?
Yang ni? Boleh je. Nah. Tak apa, awak simpan je apple tu, okey?
Betul ke?
Betul.
Terima kasih, Kak.
Okay, so A untuk?
Apple.
B untuk?
Ball.
C untuk?
Cat.
Nak! Lap cepat!
Walaupun dia tak ada dokumen, cik, dia tetap ada masa depan.
Peraturan tetap peraturan.
Kalau dah tak ada jalan lain, cik, memang masa depan budak-budak ni tertutup selamanya, cik. Budak-budak ni tak minta kemewahan. Diorang cuma minta peluang. Kalau maksud sebenar raya adalah untuk buka pintu dan hati, inilah masanya tuan-tuan dan puan-puan. Untuk kita buka pintu untuk mereka ni semua. Bos, shop kita terbakar sebab ada orang buang rokok. Kita kena cari tempat lain.
Mr. Lim, saya nak jemput awak ke rumah terbuka hari raya nanti.
Bukankah itu maksud sebenar raya?
Pergi! Pergi!
Dulu aku fikir sekolah untuk yang ada. Cikgu ajar ilmu untuk semua. Walau datang tanpa nama, di sini kami semua diterima.
Haji, bye-bye, bye-bye. Tempat ini tempat ini nama orang pakai je. Tapi jangan bising sangat.
Cikgu nak awak ingat satu pesan cikgu, okey? Ilmu yang kita ada, kita kena kongsikan dengan semua.
Tahun depan boleh tak saya ajar budak baru?
Boleh.
Terima kasih, cikgu.
my kids in Chocolate to become the future leader. They can be proud of themselves telling that I am the street children that came out from the Bujang Chocolate. And I'm here to change humanity. I'm here to change how people live. Okay, done.
Hi, morning everyone. Welcome back to Morning Kappa. Good to see you guys again. Right, so for the S&P 500, well, it finished slightly lower yesterday, losing about 0.4% after a very choppy day. So we actually saw a nice jump at the opening, but those gains were offset by the higher oil prices, reminding everyone that the conflict is still a major risk to the global economy, right? So I think the tech stock took a hit yesterday. Investors moved their money or their holdings, right, into more stable companies like food and also the energy giants, right? So I think the good news is that the Fed signaled that they do not plan to raise the interest rate this year, which also helped to keep the market steady. So for today's session or Tuesday's session, right, we expect the market to stay cautious as we wait for the latest inflation data and also more news for from the Gulf, right? I think just to share with you, the VIX or VIX index is currently signaling a significant shift in the market sentiment now, which also tells us that the volatility index is increasing, which the recent spike reflecting heightened investors anxiety. I think we're also seeing that the fear gauge climbing as the market participants become more defensive, indicating that the volatility is no longer in the sidelines, like what I mentioned just now. Also, this the uptick suggests that we should prepare for a choppier environment in the a medium term or near term as the market processes the new risks currently. Also looking at the US trading stocks that you have published overnight, we have ExxonMobil, stock code XOM. So the stock is experiencing a breakout at this $165 level, and now we expect the stock to travel higher towards 175 on a strong momentum, followed by the next resistance at $185 level. Now, if the counter to reverse lower, do watch out for the $155 dollar level for the immediate support, as it could indicate for a trend reversal. Also, next we have SLB, or formerly known as Schlumberger, a well-known oil and gas company, right? So looking at the charts now, the counter charted a higher high structure of formation, forming a higher low formation, which also breached this $51 level. So if now the stock climb up higher, we could see that it might travel towards the $55 level together with $60 level. And now if the stock to slice lower below this $48 level, this might shift to a bearish structure, right? So we have two breakout stocks for US market, which is XOM and also SLB. Right, so for the China E50 future as well, the market closed slightly lower on Monday's session as investors stayed cautious. I think while threats to the oil supply and also the shipping in the Gulf are causing some nerves, right? There's still some positivity to the market as the new data is expected to show China's factory activities is finally returning. I think we also saw some strength in the big energy stocks after this PetroChina announced a major boost in their investment plan for the year. So for today, I think we do expect the market to remain in the wait and see approach or mode, right, as we wait for the official economic growth number to be to be released. Right. So if you look at these WTI crude oil futures, well, it has officially broken through this $100 barrier or resistance, settling at $104. So I think the market is reacting to the major escalation in tension with President Trump threatening to bomb Iranian oil sites if the shipping lanes are reopened. We also saw the Houthi forces join the war recently, which adds more danger to the global shipping routes beyond just the Strait of Hormuz. So I think while some tankers are still getting through on the case-by-case basis, I think the overall supply crunch is getting worse. So do expect a very volatile and also bullish trading session today as the world waits to see if these military threats turn into action, right? And looking at our market, so I think it was a tough start to the week for the KLCI, which dropped nearly 25 points to close at 1687 points. So I think the market across Asia were rattled by the surging oil prices, which also hit nearly $110 per barrel after more conflict reports from the war. I think this also has caused a sell-off in our major banks, stocks like Maybank. However, it wasn't all that bad in terms of news, right? I think our plantation and also energy companies such as KLK, we have SDG, those Hibiscus Petronas Chemical actually went up as they act as a natural hedge against the raising oil prices. So I think for today, expect the market to stay very sensitive to any news from the Gulf. Right. Also, we recommend staying defensive and also focusing on the high quality commodity or utility names for now. I think also the if you look here, right, the heat map, the index faced significant pressure from our banking heavyweights, CIMB, Maybank, both seeing notable pullbacks as investors adopt a more defensive view stance, right? So on the active list, I think Bumi Armada and also Zatrix saw heavy trading volume despite broader market gloom. So the overall market breadth was weak, with the decliners significantly outnumbering or pacing the gainers, which also suggesting that traders are staying on the sidelines, right? So looking at yesterday's sectoral performance day to day, right? Well, it was led by the plantation with healthcare related counters to be the second leader with 3.58% and also 2.92% gains respectively. And also in terms of watch list, yes, many are still looking at the energy sector, but do not neglect the positivity from other sector as well, such as this plantation sector. Right. So moving on to our Malaysia trading stocks. So today we have Press Metal. So the stock is on its breakout formation, higher at this 8 ringgit and 5 cent level on a strong volume. And with that, we expect the momentum to keep bullish and the stock able to propel higher to test the next resistance at 8 ringgit and 50 cent, followed by 8 ringgit and 85 cent level. So if the stock to clear below the 7 ringgit and 70 cent support, this could reverse the course and trend lower. Also next we have SOP or Sarawak Oil Palm. Right, so the stock is experiencing a pending breakout at 4.50 level. So if the stock to remain bullish, we're expecting for the price to reach 4.70, followed by 4.90 in the coming session, together with high volume as well. So do keep an eye at this 4.30 level for any attempt of reversal. So today we have one breakout stocks, which is precious metal, aluminium, and also one pending breakout stocks, which is Sarawak Sarawak oil palm. And also for the FCPO will continue to climb for the third day in a row, right? Closing higher as the buyers reacted to a very strong export numbers for March, right? I think which also have jumped almost 50%. So the market is also buzzing after the Indonesia's president officially confirmed yesterday that they will start their 50% palm oil film mandate this year, which to protect their energy supply from the war. So I think at this juncture, we are still seeing that this 4,800 and also 4,925 ringgit level, resistance level remains strong as a resistance, right? And hold our positive trading bias at this juncture. Okay. Right, so looking at our campaign, okay, for our promotional campaign right here that we have currently, that's still ongoing, so you can now stand a chance to win a Tesla and also iPhone 17 if you trade with us. So you know the deal, you trade, the more you trade, the higher chance for you to win. Right, so I'll stop here and pass you to the next presenter. Thanks everyone and happy trading.
Yeah, hi, good morning. Yeah, so we've got a report on Ta'an today, but I just wanted to clarify something that Aiman mentioned earlier about the Indonesian biodiesel B50 mandate. It's not actually true that the president is saying that the B50 mandate will go through. What he did say was that they continue to move towards that target, and they have not confirmed whether or not this is actually going to happen in 2025 yet. So 2026 yet. So I think a bit premature on that front, but the news did report it erroneously, I think, in terms of the news from Reuters. So yeah, just wanted to clarify that. So maybe just let me move on to Ta'an. Today we released an update on Ta'an, just coming from a briefing that they held. So just wanted to update some of the new developments. So if you look at FFB growth, FFB growth they're guiding for this year to grow at 12.6% year on year. And that's supported by an expanded mature area of about 2,000 plus hectares, as well as higher projected FFB yields. If you look at the 2 months that have gone by, FFB production is up by about 7.2%. So we have seen an improvement, and that's coming from a shift to dry weather versus the prolonged rain that was seen in early 2025. So with that, we have raised our FFB growth projections as well. We're looking at 4.4 to 8.2% for FY 2026 to 2028, from previously 1.2 to 7.6%. In terms of costs, they are also expecting costs to remain flattish at about 2,000 ringgit per ton for FY 2026, and that's coming from the volume expansion as well as fertilizer costs, which are lower, where they have tendered for the first half at cost at prices minus 5% year on year. So we've cut also our unit cost assumptions accordingly by 5% for this year and 2% for following year. If you look at CPO prices, Ta'an is definitely one of the stocks that is highly sensitive to CPO prices, being a pure planter. So every 100 ringgit ton change affects their earnings by 12 to 15%. So year to date, we have seen a CPO price rally following the crude oil price movements. So CPO prices have moved up by about 15%. Currently, year to date average is about 4171 ringgit per ton. So if the prices, we just did a bit of a scenario analysis here for you. If the prices are sustained at the current 4,500 ringgit per ton level throughout the full year, we estimate that Ta'an's earnings would increase by about 30%. And of course, if this should pan out, and we assume that the dividend payout ratio remains at 70 to 80%, then their dividend per share would actually increase to 52 cents from 40 cents currently, and this will give you a yield of close to 10% from 7.6% currently. But of course, if CPO prices fall, then you will see the reverse happening. On the timber side of things, what we have seen, however, is an improvement in timber output, particularly logs, where the second 2-month 2026 log production has surged by about 159% year on year. That's also coming from the fact that last year, the first 2 months of the year was very low. At the same time, there's been pretty good weather, and they've also been given a higher logging quota for the year. So as such, we have also raised our log output growth numbers to 6.5 to 9.3% from minus 0.5 to 5.3% previously. On the plywood side, we noticed that Ta'an is also diversifying their plywood export footprint. Previously, they used to sell everything or almost everything to Japan, about 95% to Japan. But since January, they have been able to split this between Japan and Yemen. So now Yemen is also making up something like 50% of their exports for plywood. And this is driven by post-conflict reconstruction needs. So as such, we've also increased our export growth forecast to 5 to 12.9% from 2.6 to 2.9% previously. They have also trying to do things to reduce overhead costs, like replacing the aging machineries. They're also trying to engage with the government for temporary royalty relief during these disruptive times. So we're keeping to our break-even assumptions for the timber segment for the time being. So overall, we have raised our earnings for FY26 to 28 by 14.9, 7.4, and 8.8% to reflect the changes that we mentioned above. We are keeping, however, to the neutral call. If you look at valuations, right now they're trading at around about 10 times FY 2026 PE, which is at the peak of its peer range of 8 to 10 times, and its own historical PE, which is also 10 times. So we believe however, that the counter should be definitely supported by handsome dividend yields. So we're keeping to the neutral call with a 4.95 target price, which also comes with an 8% dividend yield. So let me stop here and pass you on to Siang. Thank you very much.
Okay, thanks, Leng. Morning, everyone. Let me continue with an IPO note on Empire Premium Food, which is essentially the holding company of the popular F&B brand in Malaysia, Empire Sushi. So Empire is going for listing with an IPO price of 70 cents to raise 153 million to basically fund new outlet openings and upgrade their existing stores. It is targeting to add 56 new outlets going forward in the next 3 years from the 143 it had as of February 2026, which makes it the largest sushi chain operator in Malaysia. So Empire is looking to leverage on the modular and highly scalable business model or platform that it has developed over the years, and essentially management believes that by fully owning and managing the business as opposed to a franchise model is the key to sustainable success by allowing a tight control over the supply of food ingredients and operational SOPs. This will ensure the consistency and uniformity of product and service quality. So with that, they have a very impressive payback of 8 to 9 months for their new outlets on average. I think a lot of concern will be revolving around the competition. So as one of the fastest growing F&B brands in Malaysia, Empire's strong brand appeal basically lies in three things in our view. Firstly, the product quality. The localized flavor has been very well received by the mass markets. And secondly, the model selling ready-to-eat sushi on an on-the-go model is very appealing to consumers with busy lifestyle, which is looking for on-the-go kind of option. For their 143 outlets, more about 90% are actually in grab and go format, and with more than 80% of the outlets halal certified. And thirdly, on price points, I think it's very affordable given that unit price starts from 1 ringgit 30 cent, which makes it a very compelling value for money option for mass market consumers amidst the inflationary environment. So all these competitive advantages are very much tied to their scale of operations and the quality or expertise of management in managing efficiency level and product R&D. So this will be crucial in defending Empire's market-leading position in the industry with a very low barrier of entry. So earnings forecast-wise, we are forecasting a 3-year earnings CAGR of 19% going forward. This will be very much supported by robust outlet expansion and healthy same-store sales growth. And with the expansion, we believe operating leverage will be there to offset cost inflations. Cash flow should remain very strong to support both business expansion and dividend payout. Empire is targeting to at least pay out 30% of its net profit as dividends going forward. But given the strong cash flow generation, we believe there is upside to that target. Balance sheet wise, they are in net cash position, and this position will be further strengthened after the IPO with the proceeds of more than 150 million. Valuation wise, we value Empire at 18 times forward PE. This is at the higher end of the valuation range that we peg to the small cap consumer retail companies under our coverage. I think this is warranted considering Empire's relatively more promising growth prospects and higher ROE even on an enlarged equity basis. We highlight consumer companies with scalable business model and mass market appeals have been highly sought after by the market, given the consumer behavior of down trading and value seeking. So we believe IPO price of 70 cents is attractive. We have a fair value of 88 cents for Empire Premium Food, which will represent an upside of 26% from the IPO price. That's it from us for today. Thank you so much for joining us this morning. Happy trading, and we will see you in the next morning kappa at 8. Thank you.